Several large-scale reforms are needed, but for now, India is a great power in waiting. Shaily Mittal, MNI Indicators. India's chief economic advisor recently argued that India's economy has the potential to grow at rates of between 8 and 10% if the country keeps pace with reforms. What is your view?
India is currently growing over 7%, and going forward, its growth potential rests on two pillars: its favorable demographics and the scope for large-scale investments in infrastructure fueled by economic reforms. Overall, we remain positive on India and expect a gradual pickup in activity in 2016, driven by investment demand and consumption. This is based on easing monetary policy, government measures to clear stalled projects, a focus on boosting investments, and lower inflation and energy prices. So once the pace of these reforms accelerate, we could see higher growth rates, with India potentially growing between 8 to 10%, as has been argued by India's chief economic advisor. However, execution of economic reforms is not an overnight process in India due to diverse economic priorities of very different political parties, something which has already been witnessed by the failure of passage of key reforms in the parliament.
Okay, well, India's Prime Minister, Narendra Modi, has called on the country to become the leading economic and global power. To what extent do you think this is feasible?
A lot has been talked about India becoming a leading economic and global power, and although India has a lot of potential, it needs to go through several large-scale and politically challenging economic reforms to achieve this. To mention a few, it's large-scale industrialization, foreign capital investment in infrastructure, taxation reforms such as the GST, which is still work in progress, large-scale investment in social infrastructure such as education, healthcare, and innovation in agriculture production and distribution. So overall, the government has been positive for the economy, but far more needs to be done. So for now, India is a great power in waiting.
Okay, and lastly for today, which key economic indicators will you be keeping a close eye on that have the potential to impact India in the short term?
There are several leading indicators which we think can give a good sense of the economic climate of India. To start with, we'll continue to follow MNI's business and consumer sentiment indicators, which give an insight into India's investment as well as consumption pattern. Then, as always with India, monsoons remain a very powerful driver, and we'll continue to monitor the same. Recent forecasts suggest that after 2 years of deficit rains, India could finally get good monsoons this year, which has the potential to boost agriculture production and ease food inflation. CPI inflation fell to a 6-month low of 4.8% in March, and its trajectory will determine central bank's policy decisions. Finally, on the external side, any sharp rise in crude oil price could have an immediate impact on the fiscal situation, thereby impacting not just the financial markets, but also the rupee.
Thank you, Shaily. Be sure to check back with the Dukascopy TV team for more updates throughout the week. I'm Sam Meredith, and see you next time.